Hi everyone, Adrian Player here. In this video we're going to be talking about commercial and the first lease renewal. What a lot of people don't know is that in commercial, the majority of your risk is the first lease renewal. So there are things that you can do to lower your risk into the first lease event, and then that helps you by default lower the risk on commercial. So what are some of the things that we talk about with some of our clients, especially the beginner ones that don't understand how things work? All right, first things first, most of our clients go interest only on the first period. So if you've got 2 to 4 years on your first lease, a lot of the time, if you're a lease doc client, the term matches the loan. So it ends up being like a 2 or 3 year rolling facility with reviews by the bank. So technically, you've got a 2 to 3 year period where you've got a risk event. And the risk event is where they check the valuation and they check that the loan is still in place and they check that the servicing is still there. So we've got a couple of clients at the moment that got their loan, and then they've had 3 rate increases, and they were a lease doc client. So you've got to be in a position where you've got excess. All right. So your goal in the first, couple of years of holding a commercial is to stack as much cash and liquidity into the first lease renewal. So then if anything happens, you've got that there as a cash buffer into the first lease event. And what if your tenant moves? What if they leave? Well, you've got property managers, and what do? Well, the property managers, they could be reaching out to the client 3 to 6 months earlier than the end of the lease, right? So if they're actively dealing with the client and figuring out, are they going to sign a new lease? Do they need incentives? Do they need anything to sign the new lease? How long is the lease that they're going to be signed? What are the terms? And if they're going to leave, tell us early and we'll treat you right. But then you can start an early leasing campaign to get a new tenant back in, so then you don't have a problem. And then if you've stacked cash during your first kind of 2 to 4 years of holding the property and something happens like the tenant does leave, then you've got situations where you've built a cash buffer. So as long as you keep repaying the loan and you don't default on the payments, then you're good there as well. So there are things that you can do to manage this, right? And as long as you're doing that, and a lot of people ask, what do you do in commercial? Like, when do we buy our second property and our third property? Because in residential, you're so used to ordering a couple of desktop valves, takes a couple of hours, then we do a borrowing power calc, everything gets done, everything's free and paid for by the banks, right? Commercial, it's a lot more chunkier. There are a lot more costs involved with commercial. And it's a lot more event driven. And a lot of the time these events occur around the time of the lease renewals, or around the times that rates, change heavily. All right, because you actually have to pay for a lot of these things in commercial. So a desktop val in resi might be $500, right? But a lot of banks don't charge you for that. In commercial, a valuation might cost $1,500 up to $3,000-4,000, depending on how big the property is and how specialist the val needs to be. All right, so a lot of the time people aren't willing to outlay those costs unless they know that on their side, they know that the property's gone up a lot in value, or a lease event has happened and the income on the rent has gone up, or they've built a mezzanine which they know has more lettable space. Okay, it's a lot chunkier, it's not as often, and a lot of the time it's around structural events like loan renewals or a lease renewal. If you get a new lease at 5 years, you're a lot more confident with what you can do on the commercial. So these are some of the things that you need to be talking about and discussing when you're getting a lease doc loan, a full doc loan in commercial, and understanding how things work in commercial. A broker is not there to sit there and just discuss lenders and interest rate. Okay, they need to understand the full resi investment space and the life cycle of resi, and they need to understand commercial. They need to be doing it both professionally and themselves in their personal life, which is what we've done. We've got 14 to 1600 property investors on our books. I've bought a 3.8 mil commercial myself. I've been through this. So you need to discuss these things. You're now in the commercial space, the shark space. Anything can go in a contract, anything can go on a lease. There is no consumer protections. These are the games that you're going to be playing until you're 80. All right. These loans are unlimited as long as you keep on supplying deposits and costs, and as long as you keep on buying the right deals with the right lease length and the right rental yield, you can keep going. So your goal is very different in commercial than it is in resi. Your goal is not to blow up in the first 2 to 4 years, because if you do it right, you're going to put yourself in a position where you're getting 3 times the rent on a net figure versus a gross figure in residential, and you're playing in a game where resi limits you and commercial doesn't. All right, so it's completely different with how you should be looking at things. I hope these videos are giving you a lot of benefit and foresight in the commercial space. And if you need a commercial broker that also knows all of the complex resi investment side as well, send me a message. More than happy to help. Have a great day.